Welcome to the Supporters Fund, Ask an Investor. I'm your host, Jeffery Potvin. Let's please welcome Moien Giashi, PhD, Senior Investment Associate at Green Sky Capital as our investor for today. Welcome, Moien. It's a real pleasure having you join us today.
Thanks for having me, man. Very, very happy to be part of the pod.
I love it. Well, we're excited to talk to you because there's a few cool things that you bring to this table outside of being a global traveler, and of course, including where you've had your schooling and all these great things, but you're also in this chemical space, which I've always been highly fascinated with because the whole world is in and out against this whole chemical side of things, especially when everybody's going green. And I think you obviously have done a lot in this space, so it really brings a lot of better understanding. I think we'll get to the whole market side, and then we'll dive in, of course, what's going on in the startup world. But the way we love to start our show is that we want to learn a bit more about yourself. So maybe you can talk about your schooling days from U of T to the startups and the companies that you work with today, and then one thing about you that nobody would know.
Yeah, absolutely. So I guess going back in time, I did my undergrad in Iran, did it in polymer engineering. I think the idea that I had when I was 18 was that the world is made of materials, and if I could be a material engineer, I can change the world. And that's why I started actually studying polymer engineering. It was obviously very fascinating to me. I immigrated to Canada in 2013, immigrated specifically for school, so came to University of Alberta in Edmonton. All of a sudden there was a temperature change that was massive. And I did my master's in chemical engineering. My focus was obviously oil and gas is what funds University of Alberta and a lot of research. But my focus was on tailing ponds and the environmental impact of oil extraction in Alberta. That was a very interesting topic for me, just because there's massive amount of land in northern Alberta that is captured by these tailing ponds. It's just sitting there and nobody knows what to do with it. I think hopefully now, after like 10, 15 years of research, people have better ideas about these tailing ponds, and they're trying to come up with solutions. I'm seeing a lot of startups, deeper technologies that are thinking of actually getting rid of it, extracting the water, extracting minerals, etc. So it's becoming interesting. Moved to Toronto in 2015 to do a PhD. I was in love with science, wanted to become a professor all in, and so I was like, I should do a PhD. But then I wanted to go back to my material roots. So I started working again on materials. My focus was 3D printing. I used to work with a lot of biomaterials, materials that are extracted from plants or from nature. My material of choice was cellulose. I was directly working with a lot of cellulose, trying to use them in 3D printing. It's great that we have in Canada, there's the forestry industry is actually massive. So there's a ton of wood waste that can be then extracted and used as cellulose, and then ultimately that cellulose can be used as a material of choice. So yeah, I did that as a PhD, but then I was fascinated with a lot of the research that I was doing, but kind of what was bothering me a lot was the fact that we do a lot of research, government puts in a lot of money into our research, but then what happens after that? It just dies. And I have publications, they're scientific, but nobody sees it. Jeffrey's never seen my publication. He doesn't know what I do. He doesn't know what is the application of what I do. It's just because it is sitting there. Nobody's seeing it other than other scientists who are just using it for the sake of science. And that was kind of the driver for me to step outside academia. I was looking into a lot of the patents that University of Toronto is producing. My supervisor specifically was producing. And I was like, I should do something to help commercialize all of the research that is happening. And that was kind of the starting point for me. Can I actually support commercialization of science? And then as I dig deeper, I learned more about an institute at University of Toronto called Creative Destruction Lab, which is now actually more of a global institution. And right after my PhD, I started working there as a venture manager. So I was directly working with a lot of technology companies, helping them with commercialization, fundraising, growth, etc. That was kind of my transition to more of a business side, as opposed to just being a scientist and a researcher. So yeah, did that for a year. Worked at a medical device, and then joined Green Sky Capital, which now we call Green Sky Ventures. Joined them as an associate. We at Green Sky we do invest in B2B Canadian companies, but one of the great things about Green Sky is that we do also invest in a lot of deeper technology solutions, solutions that are IP backed. There's a lot of research behind it, and that was kind of my niche, and that was something that I loved, like trying to help commercialize science, trying to help commercialize deeper technology solutions, and yeah, that's what I'm doing right now, leading the tech investment at Green Sky, trying to, whenever I have time, trying to mentor and help startup companies in deeper tech or non-deeper tech, just trying to help them commercialize their solutions. So that's been, I guess, the journey. It's I've been in Canada for 10 years exactly. Came in 2013. And I guess one thing that nobody knows about me is that I like cooking. I don't know if it's boring or not, if other people said the same thing, but cooking is definitely something that I like a lot. I don't get a lot of time to cook now as I used to, but I definitely love to find the time to cook. I love to have a beautiful kitchen and with a lot of appliances. That's definitely a dream. And a pizza oven specifically is what I love. But yeah, that's what I do that others don't know about me, I guess.
That's awesome. And no, cooking is a great skill. It's refined, detail oriented, all those good things, right? So I love it. It's awesome. Well, we're going to kind of go back a few steps, because when you were talking about it, and one thing that really kind of stands out along the things I've watched on the videos and different things that you've written, is that commercialization on the science side. I like that you really defined that this is something that you were trying to work on. Now, is there some past experiences where you did try to take some of your own material and try and drive that into a business, and what was the outcome from that?
I guess that is the other thing that people don't know about me, because it's not on the LinkedIn side. Yeah, that's actually how it started. Like we had new material classes. The material classes could be used for 3D printing, especially for 3D printing of biological elements. So you could like 3D print something that looks like an organ, and then you could take this and try to like add drugs to it, try to test with a lot of drugs and see what would happen. So we would call them organoids, and you can actually mimic how an organ would behave in response to a specific drug, for example. So that was kind of the idea that I wanted to commercialize with my supervisor. But I guess I dropped the idea, or like I dropped the effort to commercialize it. And one of the reasons was that I realized that the market size is not very large, and the folks that are going to be the purchasers of this technology are going to be other researchers, and I thought that it's not actually very large. But in hindsight, I think 5 years later, today I've seen a 3D printing company that does a lot of the bioprinting stuff has closed a massive deal. I'm seeing a lot of like smaller shops that are producing these new materials for research purposes, as well as other biological applications. So it could be a successful business. I still think it wouldn't have been as a massively scalable startup, and that's why I decided not to pursue it, because I thought it's not gonna fly and become very big. But yeah, that's the other challenge probably of the science side. Like we did the science for the sake of science, but didn't do the science with the objective or idea of commercialization in mind to begin with. Like we didn't do the science to solve a specific problem. We were just exploring and discovering.
Well, it's interesting that that experience actually defined where you went next in your journey. And if you take that portion of what you did, how much it's probably driven how you can operate today and work with startups, and how you can kind of lead them, because you took the time to take a technology, figure out, can I turn this and put this into a product? And as you work through that process, you also looked earlier on, can I commercialize this, and can I scale this? And you mentioned scalable startup. It was this scalable, and 5 years ago it didn't look scalable, so you kind of reverted and said, okay, this isn't going to work. Can you maybe define what made you determine this? Most startups would have hacked at it for 5 years, maybe 7 years, and then decided, okay, this isn't working, or they couldn't raise any more funds. So they chose not to at that time after
Mm.
wasting 5 years to not realize that they couldn't get any more money or scale. So, what was the determining factor for you at that point? Because I think that's pretty crucial insight that you had such an early on to say, wait, this isn't something that's going to be $1 billion company. I'm going to pause on this and go a different direction.
I think I just went back to the fundamental and tried to really map out the market. Like we had a bunch of, let's say, other research labs reaching out to us trying to buy this material, which is always a great sign, like you have a buyer. But then I was like more pessimistic than that. I wanted to see something bigger. I wanted to see a better indication. I wanted to see maybe an industrial partner ready to like do a pilot, or I wanted to see if an industrial partner could at least take this and scale it to a larger scale. And really what happened was that I basically tried to like map out what is the market size, like how much can I sell, what would be the revenue of this company, let's say the first 3, 4, 5 years, just in my head. Like obviously we know financial projection is amazing, but it never comes to reality. But then I realized that, okay, with a realistic kind of projection is not something that is scalable. It's going to be something that, yeah, it's going to be a business, probably in successful days can get to like 500,000 revenue. But then what I had as the core of the technology wouldn't be something that is scalable, just because of the nature of the customers. The nature of the customers remaining as, let's say, academics who want this material, who wants this technology to be able to do more research. That I found as a small market. Like one of the things that we ask startups to kind of give us is, what is the size of your market right now? And I mean, like there are different things that people say, like some people want to see $1 billion, some people want to see tens of billions of dollars. But like essentially what it comes down to is that if your market size is larger, the probability of you hitting the right spot is obviously higher. If you have a more niche market, if your market is 5, 10, 15, 20 million dollars and not hundreds of millions of dollars, you might be able to actually capture this market, but the probability of success is just lower compared to when you have a $1 billion market.
So when you're looking at it, it sounds like, what is the real obtainable market? So there's kind of like high in the sky, as you mentioned, financially, we've got estimates all the time that are really over exaggerated, even if they're looked at as being, here's my humble way of sharing numbers. But when you're looking at what's actually the obtainable market, so is there a refined moment where you say, okay, you know what, they're at a $500 million market. There's only 2 real players in this market. There's such an opportunity. There's big demand. There's a lot to grab off the table here. This is something that we need to jump into.
Yeah, that was definitely what I was looking to see if I can actually find. And I wasn't convinced that I can find that. And I can tell you that right now, actually 5 years after, there are a lot of startups trying to like kind of sell the same idea that, okay, I can give you an organoid and you can test drugs on it. You can see if it's compatible with your drugs, or you can do all the toxicity, genomics, whatever stuff you want to do. But then the problem is that all of these smaller players are also academics who decided to commercialize this, which is great. All of them might be successful small businesses that generate revenue and create jobs. But I would argue that they're not startups. They're not massively scalable businesses that can capture a large market size.
And to refine that one step further, what do you see as being and not specific a company, but what do you see as something that is scalable? Like, what does scalable mean in your eyes? Is it, 100 million in 5 years? Is it product in hand? Like, what makes a better scalable company for you guys to say, yeah, this makes sense, or for yourself, that makes sense that we should dive into this, or at least start supporting this tech when it's early on in year 1 or year 2?
Yeah, I think definitely seeing a specific market size, like yes, if you go deep and look at the obtainable market, is it actually $100 million obtainable market? At least I know people try to map out their TAM and they're like, this is $1 trillion market. Everybody breathes every day. This is a huge market for us. Let's produce oxygen. But no, we look at deeper, look at the obtainable market. Like if you actually map out all the customers, and if you were to build a sales funnel, can you actually build a sales funnel with which, if I give you $20 million, you can go out and at least generate like $100 million revenue in a matter of a couple of years. And going back to financial projections, people send us a projection. The first year is X amount, second year is 3X, third year is 5X, and so on. And they try to show that hockey stick, or I guess the bottom side of the S curve. But what is interesting is that first of all, none of them really hit that number. It's just like scaling is not that easy, but at least having the potential to scale, having to be able to disrupt the market through a scaling quickly is something that you're looking at. And it comes from the market potential, it comes from the technology itself, obviously it comes from the team itself, but I think it is definitely a combination. But if you want to just focus on the size of the market or obtainable market, if you had enough, like all the money in the world, and money was not a problem, could you actually get to $100 million in a matter of a couple of years?
I think that's probably where I find and see a lot of people in this market when they're building, is that they're not building off having market fit, they're building off dreams. And when they're building off these dreams, they're very scalable, of course. In your mind, we can scale anything, but they're not realizing what the effort is that goes inside of this. So if you're going to do 100 million, does that mean you have a team of 1,000? If you're going to, or 100? And in order to get that scalable movement going, have you created a flywheel where that process is just so quick? And we've had companies over the years that have failed, and we asked them, what would you do different in your next company? And I think a lot of them had different versions of things that they would do differently. And again, lots of different comments behind it. But one of them, which always stood out to me, was that they never found that commercialized flywheel, which was the printing press of how that revenue just keeps regenerating itself. What were you doing that allowed for your business to find that niche, as you mentioned, and then just cookie cutter that process, so that instead of having a 6-month close, you have a 1-week close or a 1-day close? And how do you keep revolving that number down? And I guess if you're looking at the scientific side, you know who you're selling into, and you know that academia will take maybe longer for them to process, understand, and approve and agree, which could mean that this could be an 8-month close from the start of that pitch. That means that you have to have quite a few irons in the fire in order to keep that repetitively going. And then can you take it from 8 months down to 4, down to 2, down to 1? And if that's not feasible, it's always going to be 8 months. Then you really have to have a big pipeline in order to cover that off to make this business scalable at any point in time. And I think scalability comes with speed, and that's always a tough factor to battle.
And I would just add that scalability is not the same as a scaling at any cost. Like, you have a scalable business, or potentially a scalable business, but if you go crazy and you double the headcount every year and like double the burn or triple the burn to double the sales, that is not desirable then.
I think you're seeing that a lot in the markets today, where you're having a lot of corrections, where companies who have been throwing money at sales are realizing that when they cut back their team, they lose half their sales, and they start to falter because, as one of paraphrasing, you're either the painkiller or you're the vitamin, and it's better to be the painkiller than the nice to have. And I think a lot of businesses are realizing that when markets get tough, people cut certain pieces of their expense. So are you going to be part of that model, or are you going to be removed because you're not really of value to the company? And I think sometimes you really do have to take that scalability side and decide, if this is scalable, is this something that will always be needed in this company? And can we grow within that client that we have?
Yeah, no, absolutely. and I think what kind of resonated with me is also, if you are the painkiller trying to be the better, faster, cheaper painkiller versus to be another generic painkiller that can't differentiate, is also something that would help you build a more sustainable business. But I mean, what I want to caveat this whole conversation to is that a success is not building a startup. You can also build a small business, you can generate revenue, you can create jobs and be a successful person and have good salaries. And that is still very, very valuable. A huge portion of the economy is built by small businesses. Not everybody should be a startup.
I love it. Well said. Completely agree with that. So now you take this learning that you've built off, trying to build out this first model of your business, and then you started to work and help a lot of these other groups, accelerators, incubators, obviously on the venture firm side. So you're doing a lot of interaction with founders and startups, and helping them kind of better see that this business that they're building is possible to be scalable. And not every business, as you said, is going to have those capabilities to be scalable. And the other thing that kind of really dives into what you've been doing is that you're a part of a lot of board observer sides. And what I wanted to learn more about, because I think I get a lot of these questions. One, people have a fear of putting boards together, founders. And then secondarily, a lot of them don't understand what an observer role is and how it supports the business and what the reasoning behind them are. So you tend to find you're sharing both sides. Can you give us an idea of how these boards are set up, or how you participate in an observer role? Because I think this is not only key for you and how you're developing in the venture world, but it's also key for founders to understand that there's a lot of value you can gain from an observer role inside of your board.
Yeah, no, absolutely. So I guess historically, when you started to grow your business, you get at a point that you want to put together a board. This has nothing to do with having an investor. Just grow a business, and then I guess traditionally you IPO, and now you must have a board, et cetera, et cetera. So that has been traditionally how it used to be. Now, let's say startups are the group that you're focusing on. They start, they probably raise a pre-seed round. Some of them don't want to start having a board at a pre-seed just because they have a couple of angels. It's just the founders. But then once they raise their first serious institutional round, let's say their seed round, they start putting together a board. And usually the composition of the board is like one or two investors, one or two of the executives, and it could be one person from outside. This composition can obviously change. It could be a 3-person board at the beginning, or it could be a 5-person board at the beginning. Obviously, I think it's more valuable to have fewer board members at the beginning. I've seen companies that have 8 board members and the value of the company is at 6 million. That is obviously relatively a red flag. And the reason for that is that this company, for example, was spun out of a hospital. There was one person from the board of the hospital that joined as a board member. One person was an investor. One person was the original founder of the company. One person is a C, and then you add these, and then it becomes 8 people. Obviously, at such a small scale of a company that you're at, if you have 8 board members, that you're just basically not being able to do anything, because you have to respond to 8 people and put together 8 people to make any decision. So that's a red flag that I've seen. But imagine you have like a standard 3-4 person board at the beginning. One of the things that people mix up is that, let's say if you're an investor and you are on a board, your role is to protect your investment, but that is completely false. As an investor who is on the board, your role is to protect the shareholders and what the success of the company, to maximize the profit or earnings or whatever the objective is for the shareholders of the company. So there are obviously sometimes conflicts of interest. People have to declare that. They have to make sure that the shareholders' gain is utmost important compared to their own investment. That's one. But But then, yeah, as you mentioned, there could be a lot of benefits from your board. Your board members could be folks that have a lot of experience in certain things. Your board member could have 30 years of M&A experience. Your board member could have many years experience as a CFO, or could be specifically like a technical person. Stuff that you share in your board meetings could be related to your cybersecurity stuff, risks that are associated with your business. As you grow, you might have a specific committees, like a compensation committee. So it can grow and expand into different committees and groups and subgroups and different types of conversations, but with the idea of helping the CEO, helping the executive team, and the ultimate objective of helping the company grow and thrive for the benefit of shareholders. So that's the objective. But obviously, we have to make sure conflict of interest is always like at everyone's minds. Like they talk about their conflicts, they make sure that they put shareholder in front of everybody else, et cetera, et cetera. So these are the things that also have to be there. But then the role of board observers. So those are folks that come in. They could come in from the investor side, or they could come in just as an advisor. They don't have a board voting right, so they wouldn't be able to vote to do anything specific about the company, but obviously they can observe the board. They can give advice to the CEO based on the conversation that has happened. They specifically could have also different types of expertise and skill sets. But I guess one of the things is that then they are not liable the same way that the actual board members are. They're just observing. They can talk, they can give feedback, but they can't vote. And as a result, they don't have the liability. It makes it easier for advisors to join and sit at a board and be able to give feedback, let's say back to the founder or back to anybody else who's on the board without the liability or the challenges that are legally binding.
I love it. That's a great description of how the board and how it interacts with the CEO and the rest of the founding team, and of course the team. But also I love how you tied in a few of these pieces around it really is offsetting the skill set of the CEO. They're looking for people that would represent the business. And as you said, this isn't about protecting their own interest. And I think there's a real shortcoming here is that people that go on boards feel that their goal and everything is to be the CEO of their own entity to make sure they don't lose their shares or lose their value while pushing their own directive. And that happens at all levels of board. And it's really an unfortunate piece because you need to be unbiased. You need to come in with the goal that you're representing all of the shareholders in that company.
Yeah, this is obviously a much longer conversation. I tried to squeeze a bunch of things that might not have even a straight line of train of thoughts, but yes, you're right. It should be valuable. It should be to the benefit of the executive team. It should be to the benefit of shareholders. And I think founders should be more educated about what the board can do for them and the responsibilities of the board, because it's not just the board coming and sitting and trying to interrogate the CEO, but also the CEO going in prepared and ready to ask questions and ask for help and ask for support.
And it's interesting when you say the interrogation part, because I think that's the fear the founder has, is that when they have this board, they feel like, oh, this is terrible. I don't want this. I like making my own calls. I don't need anybody's help. But there really is a huge value to have a coordinated team that's supporting your every initiative, but also doing homework in the background. And as you mentioned, doing a lot of research and coming up with viable information that can better offset the direction of the business and really help hone in on that strategy so that businesses do have a better trajectory forward to succeed.
Yeah, and I mean, one other thing that I would add is that board is responsible also to educate themselves about topics of the day. Like today, the conversation is around cybersecurity. You might be someone who's been a CFO for 40 years. You might not be educated enough about cybersecurity, or you might have been a lawyer for 20, 25 years, but you might not be educated enough about topics around ESG. it's your responsibility to either go learn about those topics, or whenever the topic comes up, bring in an expert to help you and help the team solve the problem. And that could be, let's say, an observer who comes in and who tries to actually support the board as well as the founding team.
I love it. And when you're working on these multiple observer roles, do you find that they're utilizing the time correctly, that the board meetings are efficient, effective, or are they 6 hours long and you feel like you didn't achieve anything at the end of it? Is there things that you would say, hey, founders, when you're putting a board together, keep these three things in mind. They're going to be helpful for how you run and operate a board, but also how you utilize observers better in this process.
I think it's the job of the board members as well as the founders to make the board meeting as useful as possible. One thing is that everybody who goes into the board meeting have to be ready. They have to have done their homework. So if it's a founder, they have to have distributed the board materials a week in advance. If it's the board members, they have to have reviewed all the board materials. Everybody should know what is the question at hand, what is the biggest problem that they are going in to try to solve before going in, so that they do their research, they have their notes prepped, they know who to call if the time comes. Obviously, making a board meeting more than 2 hours, I think it's useless. If there's a specific conversation that to be done, and it doesn't require everybody there, founders can have like a separate meeting. If it's, let's say, it's a conversation about their technology or tech stack, not everybody on the board team need to know about how the technology development is going and what are the challenges with it. Maybe there's a specific person who can help with the tech stack. So I think those are the things that can be handled outside the board meeting as well. I think overall, having now basically everybody been accustomed to using Zoom and virtual meetings, that definitely have made everything much easier in terms of having boards. People were scared of like investing in companies, for example, let's say in the UK and Europe, because if it comes for a board meeting, they had to fly and it would take a lot of time from them. Now everything is virtual, so it has made everything much easier.
It certainly has simplified things as well. And this is kind of a good segue, because it works into a recent article that you had created, which is Mentors and the Laws of Diminishing Returns, which I think was a great read, because it really does help you better understand maybe what you're trying to do as an outcome at the end, but how you get there. And are the pieces that your mentors and coaches that you're working with, will they help you get to that part? And I know you kind of steer them in that there's some value. And I've read many articles, as I'm sure you have over the years, where they say, well, coaches aren't really worth it, mentors aren't worth it. And on the other side, they're saying, no, they're super valuable. You really need these. So maybe you can share a little bit more about what you wrote there, because this all kind of fits part and parcel to having a board, is that the founders typically all have mentors and coaches as well. So really, at the end of the day, you've got all of these people that are out there trying to throw advice at you. Your board's telling you to do this, your coaches are telling you to do this, and you really have to figure out, oh man, what is the right way I need to go with this? It's my first time running a business, or it's my first time running a $100 million business, and there's a lot of data coming at you, and there's got to be some decisions you have to make. But who do you follow? Is your advisor smarter than your coach? Is your coach smarter than your board? And maybe you can kind of share a little bit about that and how it worked with this diminishing return, which again was really well done. So
I think the one thing that everybody should understand, including investors and founders, is that you're just amazing at pattern recognition. Like, as investors who might see 1,000 startups a year, over the, let's say, 10 years of being an investor, you might see like 5 or 10 startups closely getting somewhere, either going bust or becoming like success stories. But what happens, and I think the challenge is that your brain loves to identify patterns, and it loves to push you to go through those patterns over and over. So you see a startup company as a mentor and advisor, and you want to advise them, and you've seen something before historically, and you try to go to the founder and try to basically tell them, this is what I think you should do. And what you're suggesting is just based on the historical data that you have. And ultimately, at the end of the day, because you're amazing at pattern recognition, that doesn't mean that you're going to be good at predicting the future. So nobody knows what is going to happen. Like you might hear a specific advice for a specific type of business, but then that might be a completely wrong advice just because that a specific type of business wouldn't survive or scale or become a success story with whatever you've seen in the past. And so this happens with like all the 5 coaches and advisors that you have. Each of them are coming to you at a different angle because they've seen different things in the past. And like all of them might be wrong or all of them might be right. But the thing is that you can't listen to every one of them. At some point, you are basically missing out on focusing on your sales by trying to like satisfy or make your advisors and coaches happy because you follow exactly what they're telling you. So I think my advice is that as a founder, investors have put their trust in you. These advisors want to help you. The idea is that all of these people believe in you to run this business. And I think you have to trust your gut to run the business the way that you think is going to work. At least if you fail, you know that it was you and you know what you did, and you can course correct much quicker than listening to an advisor who told you to do X and you went and did X and you came back and you're like, oh, this didn't work, and you're lost. I think trusting your gut, hearing everyone's opinion is great. Hearing everybody's expertise and experience is great. It helps you gather all that historical knowledge, but it doesn't mean that it's going to be the route to success if you actually take their advice word by word and do it.
This is great. And if taking that and kind of regurgitating it back is that, maybe your gut is 70% of the solution. You know the market, you know what you're doing, you've been doing it. And the 30% is you gaining knowledge from everybody else and their historical pattern recognition, as you mentioned. I love that term for this, that you love how it's organized. But at the end of the day, it's just information. Maybe you're jotting down on an Excel sheet all the different suggestions to your main problem. As you mentioned in the board, you have one main problem and a bunch of other ones, but what's the biggest one you're solving? And you take all of that information, you line it up, and then you have to make a choice. Well, 70% of that choice will be your gut. 30% is going to be leaning towards the information you have. Now, would you recommend that throughout this entire version of this is that you have one go-to person that you then take all this information and you bounce that off? Some could be your wife, your husband, your partner, whatever it might be. And you say, here's what I've come up with. Here's what my gut's telling me. And you get their last critical feedback to make sure it validates your direction. Is there something like that that's non-biased, outside the network, not your coach, not your advisor, but somebody that just knows enough about what you're doing that can give you kind of that, I love that, or no, maybe think of this? Like, is there somewhere else that you want to do that, or just go with what you've put together and make the call?
I mean, I would say personally, I definitely have that one go-to person who's outside this network. And I think it's not that I talk to them and they give me feedback. It's that I talk to them and I hear myself saying it, and that makes it more realistic for me. And I'm like, oh, that's actually stupid now that it came out of my mouth. I think that's what you're looking for. Like, obviously, if you have a smart companion who can give you some feedback as well, that's amazing. But I think having someone to go to and try to like consolidate all the things that you've heard, and try to just spell it out, that really helps a lot.
That's brilliant. I love that. And it is, I think it lines up correctly because, again, we're inundated with so much information, so much reading, that sometimes you just need to take a pause, take a breath, and share that information to that one person that you can hear yourself talk and have them, they can cue, they can agree. It almost sounds like you're going to speak to a shrink, but at the end of the day, they're giving you enough of that direction that you can then start to set the stage and then go back with confidence to your board, to your coaches, and say, here's the direction we've taken. And knowing that it's coming from you, you now have the drive to support it, versus the other side, when you're taking it from everybody else and you accept what they've said, now you're falling behind the wheel, not driving, because you've lost that ability because you had to accept everybody else's direction. And you as the founders is just succumb to that instead of going with the information you have and making the choice that you think is going to drive that business.
Yeah, it's like Warren Buffett talking about investment, that he says invest in what you love. It's basically put your effort in what you love and believe in, because it's going to take some time until that comes to fruition. And if you don't love it, you're going to hate every second of it.
That's a good point. Awesome. Well, we're going to transition now into a couple of more, we'll say a couple more quick questions, and then we're going to get into my favorite segment, which is a 60-second rant. So the first question is, what's the toughest lesson you've learned as an investor to date?
I think it's the fact that we try to think that we have collected enough information about an investment, and we think that we know all the risks that are out there, but then the reality could be completely different. And what I've seen is an example of a company that, let's say, all the investors think that they have to write down, and all of a sudden becomes a massive success. And on the other hand, a company that everybody thinks is becoming a massive success, but all of a sudden becomes a mediocre success or just completely fails. And not just at the moment of investment. Let's say 4 years into that investment, you still think that this thing is becoming a massive success, and all of a sudden things change, and vice versa. And that has happened a lot for, I think, every investor. And I think that is a very humbling experience when you go through that and you realize we just don't know much. We are trying to maximize the amount that we know and trying to capture all the risks, but there are stuff that we are going to miss.
Completely agree with that. Love it. Okay, now maybe you can share a case study or a quick insightful piece of what it takes to be an entrepreneur. You've been an entrepreneur yourself. You've worked with entrepreneurs. Is there a kind of a case study that you're just like, this company was going to fail and they crushed it, or they did this, but they should have done this, and this is just the way it takes to be an entrepreneur? I think there's this glorified side that everybody that steps into entrepreneurship is going to crush it and sell their company for $1 billion in 2 years and walk away. But there is a lot of struggles and a lot of tough things that they go through. And maybe you can share a quick story on what it takes to be an entrepreneur.
Ooh, I think one of the biggest traits to be a successful entrepreneur is patience, and doing it for the love of what you're doing, and doing it for the love of the impact that you can have, not for the love of making the $1 billion exit or like succeeding in a night or two. So and I mean, that's one of the things that I personally don't have a lot of. Like, I'm not a patient person, and I know it's always very difficult for me to be patient. So it's not easy to recommend to people, be patient. And because you are patient, but then success might just never come. And you have maybe left a job that was paying a proper salary and are doing something that is very difficult. So I think a successful entrepreneur has a bit of craziness. He's like a bit irrational, or he or she is a bit irrational. They just believe that something will happen, and believe from the bottom of their heart that something is going to change the world. And that's why they make that irrational decision of leaving the money that can go to their pocket now from a corporate job and living with the hope of making a massive change. So that would be my take on a successful entrepreneur, being a bit irrational.
Agreed. Yeah, patience is a tough one for entrepreneurs, and maybe they'll grow that over time. But having a fifth gear and being able to take yourself into different levels to drive and to be successful, and I think those all are a big portion of what makes things work in this space. And never giving up, but knowing when to give up at the same time, as per your previous engagement. Okay, we're going to jump right into the 60-second rant. So I'm going to give you 60 seconds. You can rant about anything that you think is deemable, and then I'm going to rebuttal once if I can, and then you'll close it off from there. Ready to roll?
Sure. Yeah. Okay. I would yeah. So I would, basically my problem is with pitch decks, and this is actually not a topic that people are unfamiliar with. Like, everybody talks about pitch deck, how to better pitch. There are things that I hate about like sending a pitch deck. This could be a cold message or not. But if you send a pitch deck and you send it in PowerPoint, that really drives me nuts because it moves around. And when I want to present it, it's not as easy. If your PowerPoint or pitch deck has a lot of animation, I mean, it's beautiful, but it doesn't solve my problem of understanding what you do in a couple of minutes. So I have to like be patient with the animation. It is distracting me, but I have to like make sure that I focus on the diamond in the rough. I've seen pitch decks that seem to have made with Windows 98. So they make if this is a successful business, you don't need to spend on marketing, but at least you can build a better deck, something that looks good. I know people talk about, oh, this deck has a lot of text, this deck doesn't have a lot of text, etc. That's not the problem. The problem is that your deck looks terribly ugly, and it could just be a bit pleasing for my eye to look at. If you're using very bright blue that is really hurting me, and you're using black text on the blue, which I can't see and read, that is painful. And you can just use a simple template, make it easy for me to read and make it easy for me to understand. I think
Done.
yeah,
We're calling it at that, but I gave you some extra seconds. Well, my rebuttal to that is that, but I'm not a pitch deck builder. I'm here to just sell you on my business idea. Can't you read through all of this fluff and bad structure and bad information? Can you not just find in there the information that tells you how great my company is? Can you not just look at the end result, even if it is 35 pages long? Can you not just find the answer and be like, I want to invest in me? Why can't you do all that work? I think that there's some, in order to find that diamond in the rough, you should have to do the work. That's what the whole point of this is it not?
I think the pitch deck is like in a standardized exam. If you can't pass the standardized exam, you can't get into university. It's if you can't make a proper deck that I can understand quickly, I can't trust you with your business and your judgment. That's one. Two is that we have to look at. I have to personally look at 1,000 decks a year. If every deck takes me half an hour, I just humanly can't review all these decks in all the business days that I have. So if you can help me, please understand your business in a shorter amount of time, that would be lovely.
I love it. Well shared. 100%. Keep it short, keep it simple, and be precise. You know, put in a couple slides that really define the problem and how you make money. You know, 20% of your deck should be on the solution and the problem, and 80% should be on how you make money. Make it easy for the investor, help them out, help them get through right to the end so that they know what the best part of this is. The 35-page decks, that's probably 1980s. We don't need those anymore. So make it clean and simple, right? But I love it. I can't even not support it because I totally agree with you. The long decks and me figuring it out. Now, I love what you're saying, man. Keep it short and just get to the point. Get to the point. All right, we're going to jump into the rapid fire questions. So you're going to pick one or the other, obviously coming from your role as being an investor. You choose which ones work best for you, and we'll go through those. Ready to roll?
Yeah.
All right. Founder or co-founder?
Ooh, co-founder.
Unicorn or a 4-year 10x exit?
Oh, 4-year 10x exit.
Tech or CPG?
Tech.
NFTs or Web 3.0?
Web 3.0. Neither.
Blockchain or AI? Blockchain or AI?
Difficult. AI.
First time founder or second, third time founder?
It's tricky. Second time founder.
Yeah. First money in or Series A?
Series A.
Angel or VC?
VC.
Board seat or observer?
Observer.
Safe or convertible note?
Ooh. Convertible.
Okay. Lead or follow?
Lead.
Favorite part of investing?
Ooh. Talking to smart people.
Number of companies invested per year?
8.
Verticals of focus?
Health tech, industrial innovation, enterprise B2B SaaS.
2 qualities a startup needs to stand out to you.
Smart people, differentiated technology.
Okay, what is the piece of advice you give founders 9 out of 10 times?
Know your numbers.
Okay. Do you have a philosophy or rules that you stand behind?
I don't like founders that come to us through a broker, but because a good CEO should be able to raise their own money, but we still look for diamonds in the rough.
Okay. Who is your hero, mentor, and why?
I don't know if she knows. Sally Dobb is a mentor at CDL Toronto. She is my hero because she does 10 things at the same time and she rocks at all of them. So she's amazing. I think that's why she's my hero.
Okay, love it.
I don't think she knows me, but
well, we can send her this blurb so she'll find that out real quick. How's that?
Yeah.
What is your biggest fear or phobia in business startup ecosystem?
Ooh, everybody trying to start a startup and trying to be $1 billion business.
What line do you find you share to investors over and over?
Recently, it's a tough market.
What is your worst investment? And you don't have to name names, just maybe the process or something that happened.
An investment that I trusted the technology. I did not believe in the CEO. And I invested because I believe that I have downside protection because of the IP.
That's good. Do you have any other pods that you like to listen to or areas of interest that you can share?
I sometimes listen to the all in pod. I think everybody listens to that. It's a good one. Not agreeing with everything they say, but it's good. It's fun.
Okay. All right. Personal questions. We're almost there. Most famous person that pops in your mind?
Brad Pitt.
Nice. First brand that pops in your mind?
Ooh, Nike.
Book or movie?
Book. Oh, just like name it or?
No. Just either one.
Book.
Superman or Batman?
Ooh, Batman.
Fortune cookie or birthday cake?
Fortune cookie.
5 minutes with Bezos or Oprah?
5 minutes with Bezos.
Mountain or beach?
Beach.
Bike or run?
Bike.
Big Mac or chicken McNuggets?
Big Mac.
Trophy or money?
Money.
Beer or wine?
Beer.
TED Talk or book reading?
Book reading.
TikTok or Instagram?
Neither. Instagram.
Facebook or LinkedIn?
LinkedIn. Oof.
Favorite movie and what character would you play?
It's Troy. Brad Pitt.
Brad Pitt, Troy. That's a good flick. Favorite book?
I think it's called Thinking in Bets was my favorite book. Don't remember the author's name, but she was a poker player.
Yes, agreed. Very good book. Yes. She was if I remember correctly, I can't remember what it was. She was something else before and decided to go into poker and test everything out. She was
a psychology PhD student. Yeah.
Yes. Yeah. And then she ended up going and testing her theory out on cards and ended up becoming a card shark and loved it. Yeah, it's fantastic. Yeah. Favorite sports team?
Barcelona. It's a soccer team, Spain.
I love it. I've seen them play multiple times in Barcelona. Big fan. What is the meaning of success to you?
Ooh. making change, making positive change.
What is your superpower?
Understanding technologies that I'm not familiar with and explaining it to others very quickly.
I love it. Well, I found the same. You're very easygoing, but you're also very knowledgeable in a lot of spaces. So it's very helpful to kind of navigate through things. And you've got some great articles. So big fan. Love it. All right.
Thank
Well,
you.
I'm going to say that this is the last part, or the last segment. We're right at the end. And I want to thank you for joining us today, Moien. It's been a real pleasure getting to dive into yourself and the way you look and operate in the world. Fantastic journey. And please share with the audience how they can connect with you. And the way we like to end our show is that we like to give you the last word. So anything that you want to share with founders or investors, I turn it over to you. But again, thank you very much for sharing everything.
Awesome, thank you. Yeah, my LinkedIn would be the best way to get connected. I think the most important thing is that we are at a time that is a bit tough comparing to 2-3 years ago. There has been a lot of investment in 2020, 2021. There were a lot of companies well-funded, overfunded, overcapitalizing those years. A lot of companies over 2022 try to extend their runway, try not to raise, but now we're getting at a time that is tougher. There are fewer investors investing, and it might be they might hear a lot of no's. They might feel that they're hitting a block. I just think that they have to continue to believe in what they're doing, and try to stay positive and try to show good metrics that proves that they're building a sustainable business. It is not the question of growth at all costs anymore. It's the question of, have you built, or can you build a sustainable business moving forward?
I love it. Well supported. Moien, thank you again for all your
Awesome.
time today.
Awesome.
Okay, that was a great conversation with Moien, and some of the pieces that I kind of really stood out, I guess, is that have patience, and when you're building something, really, when you're tying in board members or observer roles, advisor roles, coaches, make sure they offset and bring extra knowledge in. But just remember that no matter how you look at it, you have to learn from everybody. And if we use that 70-30, 70% of it's gut and 30% of it's information, and tying those together. And then, as he mentioned, have that go-to person where you can bounce that final idea off and close the loop, and then make the decision and move forward. I think those are always going to be super valuable. And, I can't put enough emphasis on the fact that he talked about so much on that patient side. It makes a big difference, so you can really get a real clear view of what you're trying to obtain. And then, as he talked about the obtainable market, it really is important that when you're doing the analysis, and like his background, he's a PhD, they do a lot of research. So they really want to know what they're getting into right from the get-go. So they're researching the markets, they're researching the size of market, what's obtainable, what's not obtainable, how fast can we get this? Is this business scalable? And described a lot of how a business can be scalable or how it can't. And he took the approach where, even in his own business, when he started off and he saw that there wasn't a scalable side to his model, that they had to step away. And I think that's very brilliant, because he ended up not wasting 5 years trying to fight a market, realized right at the beginning that there wasn't a market, or at least the market wasn't built up for at that time. So lots of great knowledge there, a lot of great sharing. And I want to thank everybody for joining us today. So if you've enjoyed this conversation, please feel free to share with your friends, subscribe to our YouTube channel, and please follow us on Spotify, Google, and/or Apple. Feel free to share an audio or video clip around the show. We may include it in one of our future podcasts. You can find us on all social platforms, including LinkedIn, at Supporters Fund. Your support and comments are truly appreciated. Please visit us at supportersfund.com or startup events at openpeoplenetwork.com. Thank you, and have a fantastic day.